domestic economy shape your financial future? Are you equipped to identify profitable opportunities and protect your wealth from uncertainty? Financial expert Mr. Satish Prabhu is here. Satish Prabhu can brief us about the latest economic trends.
When you look at India's growth, while we say that the growth announced by the RBI at around 6.5% is not very large, but if you look at 6.5% compared to other countries in the world, we are the fastest growing large economy in the world. And if you look at India, India is today the world's fifth largest economy, and we are projected to become the third largest economy after US and China, maybe in the next 3 to 5 years. So that's the way India is progressing. 6.5% growth, if you look at other countries in the world, is really good. While we need to grow at 7% plus, to become a developed economy, as been projected by 2047. So that will require a 7% plus growth. But if you look at India, the second point on growth drivers, why should we be optimistic about India? The biggest reason perhaps why we should be optimistic about India is our demography. If you look at our demography, or the age distribution of our population, 65% of our population is below the age of 35. Now, when you look at that type of a population, it's a very aspirational population. If you look at how they behave, what they buy, they are very impulsive buyers. If you look at that age group, they are the ones who travel a lot. They are the ones who are not fixated about, I want to work in a particular city for the next 10, 15 years. They're not fixated about that. They are ready to move around the country. They don't want to lock themselves with, buying a house and all that. They are ready to stay on rent. They are very flexible. And they are not like the earlier generation who used to, stick to a job for 5 to 10 years. They are they look for better opportunities. They keep moving around, all those things. Why? Because they're very aspirational. They want to see better things in life, but at a faster pace. And that is going to drive the economy, because how does the economy grow? The economy grows largely through consumption. And when you look at the markets obviously are a factor of GDP growth, but they are a bigger factor of the earnings growth of the companies that are listed on the stock markets. So the earnings grow, and earnings are likely to grow largely because of consumption. And also the second factor is the infrastructure spending by the government. So recently I read a report that when the government spends 1 rupee on building a national highway, and we see so many new national highways coming up or getting bigger, there is a 3 rupee jump in the GDP growth. 1 rupee spent on highways generates a 3 rupee jump in GDP growth. So, I was listening to a video of the Honorable Minister for Transport, Nitin Gadkari, and he mentioned that, there are a lot of people who ask him, where is your next highway passing from? Because that is where the development is likely to be. And if you have read in the papers, there is a new green highway that is being developed between Mumbai and Delhi, which is likely to cover that distance in just 12 hours. Today, you need like almost 24 hours to cover that distance, but that new highway is going to cover Mumbai, Delhi in 12 hours. So you can imagine the amount of commerce that will be developed along that highway and the cities that on that highway. So there's a good connection between the infrastructure growth in the country and the growth in the stock markets as well, because consumption is likely to grow, commerce is likely to grow, and so are the earnings of these companies. Inflation, while inflation was above 6% recently, it has started moving down. But any country which expects to grow at a faster pace, inflation is part of that particular economy. You cannot expect a country to grow faster and at the same inflation not to catch up, because as I said, we are very aspirational. There is what the word uses, premiumization. There is a lot of good stuff that people want to buy. And I was also reading one more article which said that luxury goods are now 50% of luxury goods are now consumed by tier 2 and tier 3 cities. So you can imagine where the premium is headed. So when there is so much demand, obviously, more money is running after less goods, and people have the money to buy, and that's why production has to be at pace with consumption, and that's why you'll find inflation being a little bit high at time, but it's not out of control, so we need not worry about inflation. Valuations, again, currently they appear to be slightly on the higher side, more so for mid and small cap companies, but again, it's a matter of time before these valuations will catch up. On the fixed income side, so again, when we talk about risk, the risk could be due to geopolitical risk and oil prices, etc. But again, all these risks appear to be more temporary than permanent.
Thanks for your detailed answer. If you have any doubts regarding this or any other financial decision, don't hesitate to book an appointment with our financial experts. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like. If you are new to our channel, please do subscribe. Thanks for watching.